Tomorrow, the stock market is about to undergo some major changes, and after the bell, we see Micron shooting up after hours, up 8.47%. Now we come over and look at NVIDIA. NVIDIA is helping the NASDAQ rally out there today, which we talked about quite a bit on today's live stream. And notice we have this A to B equals C to D pattern, which brings NVIDIA up towards 132.99. We look at this article right here. NVIDIA investors just got a 1 trillion reason to be even more bullish. NVIDIA stocks gains as a new report projecting big growth in AI market offers some relief to investors worried about the pace of AI spending beyond next year. And we've seen some of that worry actually show up in NVIDIA's price. If we come over here and we look from all-time highs in NVIDIA, down here towards the recent low, NVIDIA has dropped 35%. Now it has been on the move back up. And the question is, will it be able to regain all-time highs before the end of the year? We come over and look at the fear and greed index. We are sitting at 67. Will we be able to swing over to extreme greed by the end of the week? Now, when we come over and look at how the indices fared across the board, the Dow was down 293 points. The NASDAQ was up 7.68. S&P 500 down 10.67. And the Russell 2000 down 3.41. We look at advancing issues versus declining. Now, it may not seem like the market was down a whole lot, but if we look at advancing issues versus declining, 72% of issues declining on the day. Then we come over and look at the sectors across the board. Energy getting smacked, down 1.91%. The leader out there, utilities. That's never a good sign when we see utilities leading the way. And we look at a chart of utilities. Look at this thing, just a rocket ship on the way up. This is another sign that we're in the late stages of a bull market, which means the end is going to be coming sooner than a lot of people may think. Now, if we come over and look at the economic calendar for tomorrow, things are going to be changing drastically in the stock market. Why is that? We feel like the price action we've been getting in stocks lately is absolutely horrendous, back and forth, back and forth. We're just stuck where we are. Well, tomorrow, things are about to change in the stock market. We look at the economic calendar. What do we see? Well, starting off 8:30 a.m., we have final GDP numbers quarter over quarter. We have the weekly unemployment claims. We have core durable good orders. We have final GDP price index. Then starting at 9:10, we have a slew of FOMC members speaking. Then we also get Jay Powell taking the podium 10 minutes before the market opens at 9:20. Then at 10 a.m., we have pending home sales. Then at 11:15, yelling be yelling. If you go ahead and add up all the FOMC members speaking tomorrow, I believe there is 9 of them plus Jay Powell. So we got to be careful for tomorrow. Will this news be enough to propel stocks higher? Maybe even seeing the S&P 500 hitting another new all-time high. Now, if you notice out here with gold today, which we talked about this on the live stream, gold had quite a strong push out here today. Now, on the 30-minute chart, MACD indicator looks like it could be in the early stages of wanting to curl over and getting a short-term pullback. We see dollar did close near the session highs. And looking out here on the daily chart, we basically got a bullish engulfing candle. And if you look at the blue line here, this represents the prior low. As long as we're getting back above that, that could be bullish for the dollar. However, with the dollar going up the way it did, we would think that gold should be coming back a bit. We see gold actually closing with a doji candle for the day. Then we look at articles like this. Why now may be a good time to take opportunistic profits in gold and silver. And what it goes on to say is essentially right here, there is exhaustion in that market. And if you notice, I have a lot of drawings on this chart, but we just completed the last ABC pattern on the way up. Now, normally once we complete an ABC pattern, the market does something other than continue in that direction. And one of the areas I may look for gold to come back towards would be about 26, 27, which is going to be right at the top of this wick of this candle. And we look right, it comes right within the minus development area of the composite profile on the right side of the chart. Now, when we come over real quick and we take a look at crude oil today, crude oil getting smacked down, and we've been waiting for a pullback in crude oil. Now, let's talk about how far crude oil could potentially pull back. We want to go ahead and grab our Fibonacci retracement tool. We measure from the swing low right up here to the swing high, and notice the 50% level comes right in with our blue line. The blue line represents the swing point right over here to the left-hand side. Now, if that's all we retrace on the way down, then maybe we set up an A to B equals C to D pattern on the way up. And if we look at that, that gives us a price completion at about 76.53. Well, what if we go a little bit deeper down to the 61.8 or right in between the 61 and the 78.6 Fibonacci levels? That would bring us right into this high volume area within the composite profile. So we need to see how deep does this retracement come? And then we need to see, do we get a rejection once we get down towards some of these lower Fibonacci levels? We come over and take a look at the VIX. The VIX was up a whopping 4 cents on the session, but a majority of the day we're hanging out near the low. Then in the afternoon, we started to catch a bit of a bid. Now, is this a warning sign saying, hey, hold up, volatility is about to expand in the very near future? Or are we going to see the VIX start making its way back down towards 52-week lows? I want to remind everybody, Apex is still having an 80% sale off all their evaluation accounts, passing as little as 1 day. And what's even better, $85 activation fees across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now we come over and look at Microsoft today, basically forming an inside candle where the high was lower than the prior candle's high. The low was higher than the low from the prior candle. So what does that mean? Tomorrow, I expect a breakout or breakdown from this pattern. Then we jump over and we take a look at Google real quick. Google today, basically nothing going on there, down 65 cents, up a whopping penny after hours. But one of the things we have to be concerned with a lot of these stocks, we have gaps all over the place. This last leg up, there are several unfilled gaps. Then we come over and look at Tesla. Tesla closing near the highs of the session, up $2.75. Yesterday, we had that doji candle. When we look, we've already completed the ABC pattern on the way up, which completed at 248.71. We've also been able to fill the gap. So now the question is Tesla going to make it up towards a 127 extension or start the rollover here just a bit? Looking at the daily chart, the MACD indicator is showing no signs of weakening at this moment. Then as we jump over and we take a look at the Dow Jones getting a nasty down candle today. Now, today we're talking about this on the live stream as well. If you want to make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. We look at the Dow, Apple was taken away, Amazon was taken away, BA was taken away. We look over at Home Depot, taken away, JP Morgan, Amgen was taken away. However, Intel was a little bit of a bright spot, but all in all, we see a lot more red out there in the Dow. And is that going to be problematic moving forward? Keep in mind, we have this gap right down here at about 416.13. Will we be able to make it down there, fill in the gap this week? MACD indicator looks like it's starting to curl over on the daily chart. Then on the 1 hour chart, notice we're already back at the zero line. Now, if you're looking to be bearish, be very cautious at this level. If the Dow is staying up here at these upper levels, watch out. If the MACD indicator starts to flatten out, this could be nothing more than a recharge point for another leg higher in this market. However, I would prefer to see the gap down here being filled before another leg starts to head up higher. Now today, we also saw the Russell 2000 when the dollar was shooting up. Russell 2000 was quite weak. We saw IWM down $3.44. Now, if we look at a fib from the swing low right here up here to the swing high, the 38% level is right down here at about 216.95. If that's all we retrace, that would be a minor retracement and what could still be a very bullish move in this market. Then if you look, we were able to actually close out 2 gaps today. So we've been talking about 3 gaps on this leg up. We closed this gap right over here. We closed the gap where this doji candle was. Now, are we going to come all the way down closing the next gap? Are we going to set some type of ABC pattern that actually takes us all the way back up towards the highs? Keep in mind, the longer term ABC pattern is still in play, which completes up here about 230.02. Then as we jump over and take a look at the QQQs real quick, notice today we actually have like a shooting star inverted hammer type of candle. After we've already had hammer, hammer, inverted hammer, we're not really getting a push up and out. MACD indicator, however, is not showing any weakening of the momentum at this moment. Then out here on the 4 hour chart, what do we see? MACD indicator looking like it wants to cross and roll over. And we have that very similar gap like we talked about with the Dow on that same day, which is all the way down here at 471.29. Now, if you notice, if we can clear above this area here, maybe, just maybe, we'll make a run trying to fill the gap that we have up here, somewhere in the ballpark of 496.53. Then as we come over and look at the 30-minute chart, what do we see? Well, we drew this zone out in the first 30 minutes of today's live stream before the market opened. And this was a zone. I said, watch out. The first time we come into it, expect a bounce up and out. And that's exactly what has occurred at this moment. Now, if we come back in to this minus development area again, then I would expect lower prices moving forward. Now, as we come over and look at the futures markets real quick, notice we're just kind of wedging up. Are we going to see another blast off and then we finally start coming back down? Maybe it does not occur out here until next week, or maybe it's going to be Thursday or Friday. Now, we come over and look at the daily profiles. Here's some levels that we had mapped out today. And one of the key levels was right down here at this minus development area. We came into it, boom, we rejected right out, and we had that level marked off well in advance. But let me go ahead and clear all the drawings off the chart. As we're looking at this, you can see right now we are currently above value area high, which comes in at 20,236.00. We have the point of control at 20,184.00. Value area low will be down here at 20,161. Now, tonight during the live stream, we'll also see where any resting liquidity orders are during the Asia session, see if we have any additional targets. But as long as we're above value area high, I do want to focus on this swing point right up here. And you might say, Mike, I thought you said if we close outside of value, you expect a retracement back down. Normally I do, but if we close that close towards value area high or value area low, then I'm not really looking for that type of play. Now, when we come over and look at the SPY real quick, we can see we've been told September is a very bearish month. And when we look, we've only had the first week of September was down. We have now since had up week, new all-time highs, and we are threatening another new all-time high. We look out here on the daily chart. What do we see? Basically, upper level consolidation up around this area. We're building out quite a bit of volume out here on the composite profile as well. Then we dive down, look at the 1 hour chart. MACD indicator is still making its way down towards the zero line. Then on the 30-minute chart, here's the area we marked off in the beginning of this morning's live stream. What did the market do? Came down there, boom, rejected back up. Now, if we come back down here again, I do expect that area to break. Then we'll see if we can come down there, potentially filling in the gap all the way down here at about 561.33. Now, when we come over and look at the 4 hour chart for the ES futures contract, notice we're having a hard time pushing up and out. However, that doesn't mean we are not going to be able to push up and out of this area. Now, if we do start to come back down, especially if we get below the weekly value area high, I do want to focus on these two minus development areas. Now, the first area comes in at about 57.40. The second area will start coming in about 57.14. However, I'm not worried about those areas unless we get below the weekly value area high. Then as we come over and we look at the daily profiles, notice we zoom this out a bit. We've had a lot of consolidation up at this area. Now, tomorrow, will we get a false break up only to come a little bit lower? Keep in mind, if we do start to break lower, these minus development areas are going to be critical. I will be focused on them. Today, we only had a range of 30.75 points, so a relatively tight range. We look at the volume profile levels. We have an untested point of control up here at 57.90.50. We have value area high at 57.97.00. And we have value area low right down here at 57.79.50. Now, if we start breaking below value area low, I'm going to retarget this zone right down here. And again, that zone comes in at about 57.72 down here towards 57.68. I'm in the camp where I believe if we come back down here once again, we're probably going to break it. Then I want to turn my focus down here towards these candle bodies at about 57.61.5. Anything below that, I want to target those other two minus development areas that we talked about off of the weekly profiles. Now, if you want to learn about the pros and cons of fast track trading, check out this video right here.